the trend has been to pile on to bet against the euro. In fact, traders and hedge funds have bet nearly $8 billion against the euro. That's the biggest ever short position in the currency on these fears of a eurozone debt crisis. For more on the impact of sovereign debt worries on currencies, we're joined now by Win Thin. He's senior currency strategist at Brown Brothers Harriman, which manages about $40 billion. Looks like more than a few people caught short today, given the size of that bet against the euro and what we're seeing in today's market. Win.
Yes, that's always the risk with this sort of severe position skew, is that we can always have some sort of short covering rally, which I think you're right that we're seeing today. But bottom line, the sentiment remains negative on the eurozone. I think it's going to remain negative. There's no real quick fixes involved in this situation. So this is something that's going to be multi-quarter, if not multi-year process ahead in terms of euro weakness, euro concerns.
Now, when it comes to what's happening with the U.S. dollar, you seem to be somewhat of a dollar bull here. Are you betting on dollar strength because of the fundamentals, or simply on a relative basis here that the dollar seems to be the only real alternative?
Well, you know, with currency market, it's all relative. I mean, that's the really interesting thing about foreign exchange, that there's always two sides to the trade. That is, if you're negative on the dollar, you've got to be positive on another currency. And, you know, that trade worked with the euro in 2008 when the eurozone looked like it was doing, everything was hunky-dory, everything was doing fine. But now it's clear that there's real severe strains that have developed in the eurozone. As a result, that flip side of the negative dollar trade has really been taken away. And I think that's something that is a fundamental underpinning for the U.S. The growth is going to be outperforming in the U.S. You know, it's severe political problems in Europe. I think that's something that's a recipe for a decent medium-term dollar rally. So
are you betting as well on capital inflows into the United States because the dollar has been relatively cheap?
Well, there's several different trades you can look at. One is sort of a mean reversion trade. That is, you know, the dollar's been undervalued severely against the euro. The purchasing power parity for the euro is around 119. So we are still severely undervalued for the dollar. So that's something that's dollar supportive. The other thing is the momentum trading. I think that's what we're seeing with the futures market, is that the momentum trade is just piling onto this trade because it's really been working wonders for the last several months.
Okay, well, overnight, you've got two big things to really sort of place some bets on. One, what's going to happen out of Asia with China unleashing a slew of economic data overnight, CPI, retail sales, others, and the question of just what happens when Jean-Claude Trichet gets off that plane from Australia. What are you betting on overnight here?
Okay, there have been two big things that have been really rolling the markets lately: Greece and China. I remain concerned about Greece. I think that's a real long-term problem. China, I have to be honest, does not keep me up at night. I think the fears of overheating, of a hard landing in China are overblown. They're tightening modestly.
Where does inflation have to go to, though, before we see appreciation of the yuan?
It's not the inflation situation. I think it's the recovery in China. The authorities in China are very concerned about the global outlook, and they've kept everything on hold since mid-2009. When things look better, they'll start appreciating.